What is up? Good morning, good afternoon, good night, wherever you're at. Welcome to the BitLab Academy daily live stream every day, Monday through Friday, sometimes on the weekend too, 10:30 a.m. Eastern Standard Time. My name's Kelly Kellam. Welcome to the show. Let me know if there's any issues with any audio or video. I had to make some adjustments on my set, my home set here, but I hope everybody's doing well. How are you feeling? What are you seeing in the market right now? Are you buying? Are you selling? Anything you're DCAing right now? Are there any setups that you're seeing? Let me know. Let me know in chat. This is supposed to be a community thing, not just me talking at you. But I will say, it does a great service to the crypto ecosystem when you watch a show like this. If you hit that like button, hit that subscribe button, ding that bell. And again, welcome to the show. If you have not yet, please make sure that you do check out all the socials we have down here. You can see all down here. Make sure you're following the correct ones. There's a lot of scammers out there. It's main reason why I point these out is to make sure you're following the right profiles and that you check out bitlabacademy.com as well. We're working tirelessly to completely overhaul the entire BitLab Academy, new website, new courses, new lessons. And that's, I mean, it's months in the work now, and we're right at that edge about to be releasing all this stuff. So check all that out. Hope everybody's doing well. I'm going to shout out everybody in chat here. We got a lot of wonderful people that are here. I mean, every day. I cannot believe how strong our community has grown in the last couple weeks. So shout out to everybody. My data must be incorrect. It shows that we have one concurrent viewer, and I know that's not the case because I see all these people in chat. So just let me know if there's any issue with the stream, and I can reset it if I need to. But shout out to Karen Swaggart Harris. She's the first one in the house. Crimson Caravan Company, Mike Vollmer. Who else we got? DJ Lavish, Taylor Brown, Alexandra G. What's up? Amelo Fellow. We got a King Peasant, Matt C, Kurt Eichler. I'm not sure if that's pronounced correctly, but Alex Green, my boy, Justin Eubanks. We have so many people here. So shout out to everybody in chat. Again, so we've got a lot of stuff going on in the markets right now. We've been talking about this going on a month now with the sort of tipping point that Bitcoin crypto may or may not be at in terms of launching into a bullish, like a full bull trend. Of course, we've had that bullish impulse, but there's a lot of stuff weighing on the markets right now. And there's some things that are showing in the charts and some things that are kind of popping out. That could be the the magic that crypto needs to have that liquidity to have the fuel to move higher. So we're going to kind of go through that today, and I did something that I want to recommend everybody does, regardless of how long you've been in crypto, whether it's a day, a week, a month, or 5 years. Myself, I've been in since about 2016, and I was trading starting back in about 2011, 2012. One of the things that I do somewhat, I have, some charts that I have that are longer term play charts. And then of course, that I'm sort of projecting things out in the future. But then I like to, use alternative charts sometimes and remap out what's going on and see if I'm getting a new lens on what I'm seeing, if I can also clean up. So, because sometimes you don't realize after the course of a month or 2 months or 3 months on an asset, you don't realize how, messy your charts get. And so because of that, it's like trying to find, a small piece of jewelry in a messy room. So it's good to clean up your chart sometimes. And you're going to see I've cleaned up my Bitcoin chart. I like to use, especially right now, I'm not doing a lot of leverage right now. I'm doing mostly spot trading because we're in this chop zone. So I like to use Bitstamp for that because it has, I feel like some of the most honest volume, in a way, it cuts through some of the noise that we see with a lot of the wash trading and stuff on other exchanges, meaning they're, inflating volume by just trading between different accounts. So they can, because volume is everything for exchanges, and they want to show that they have high volume. So I find that Bitstamp has pretty clean data there. So we're going to be looking at the Bitstamp chart today on Bitcoin, but then we're going to be going through a number of other altcoin charts. There's a bunch of trade setups that are brewing. from some of the stuff in the top 10 to, you know, also some coins all the way down in the mid 50s, all the way down to the lower top 100. So we're going to be going through a lot. Let me know in the chat. I've already got a couple charts pulled up, but I'll have some space for other charts. So let me know in the chat if there's anything I'd like to keep it in the top 100. Let me know what the ticker is, something that maybe it's a setup you've seen or something that you're just curious about. Alex Green and the other mods will kind of get a list together for me, and I'll try and hit a couple of them. Yeah, let's go ahead and dive into it. Again, I hope everybody's doing well. And if this is your first time, my name's Kelly Kellam. So welcome to the BitLab Academy daily stream. Let's go ahead and get it. So jumping in here first, make sure you're following BitLab Academy, which is at Academy BitLab. You can see right here. And one of the best services you can do to help support this channel is not only hit that like button, hit that subscribe button, and ding that bell, but come over when we're doing these morning notifications about the stream going live. Go ahead and come here and share this. Let your friends and family know. This is how we build the community. This is how we help the community be stronger. This is how we help more people be in profit versus out of profit. And especially in these early days, if you're one of those people that's in your family, one of the first person in your family that gets involved in crypto and you lose a bunch of money, well, that hurts the crypto ecosystem, because then now other people are more wary of getting involved because they think it's something that they're going to lose money in. But if you basically learn how to ride this bike, which we're doing here at BitLab Academy, we're walking you through every different step from tools and tactics and techniques and strategies and understanding charts and on-chain data and, understanding support and resistance and all these things, trying to break it down, bridge that gap from beginner to pro. If you can make money in this, you will be a positive seed in the crypto ecosystem. So go ahead and share this with people, help other people learn in the process. So again, I want to also recommend you come over here, follow me. I'm coming just shy of 20,000 followers now. I've been, I've had this Twitter account I've had it since 2010, but I have not used this. I did not start using it until August of 2021 when I was working over the Crypto Jeb team. Yeah, it's a pretty fast rise over the last year, just sharing charts and TA and thoughts on the market. And I host a Twitter space as well. Most Thursdays, I've been quite busy getting the BitLab launched right now, but enough with all that. Let's talk about the charts. Okay. So one of the things we want to look at is this right here. What I was talking about before. And again, we're going to do about 10 minutes of these charts, and then we're going to get straight into basically breaking down some trade setups and some other altcoin signals and things that we can do that. All right, so one of the things we want to look at here is liquidity in markets. And when we see this right here, this is total assets of major central banks. Now we can see the Fed, which is the U.S., and the ECB, which is the European Central Bank. We see this has dropped off precipitously, basically all of 2022. And what is that tied to? That's of course tied to the drawback on markets all of 2022. This bearish trend in both traditional assets and Bitcoin and crypto. And this is money coming out of markets. So what happens when money's coming out of markets? The risk appetite evaporates as well. And there's no fuel to sustain the prices that they're at. Therefore, people get scared. Therefore, you see the prices drop. Now, what we are seeing, we see this also with Bank of Japan and the People's Bank of China. We see this also is dropping precipitously, but we're getting a sort of rebound here coming into 2023 where these two players, Japan and China, could be a sort of foreshadowing of what may be to come with what happens here in the US and in Europe, because the money printers have been turned off, and absolutely they have needed to. But if we look at this in just a capitalistic sort of money way in terms of a trader's perspective, what we want to see for asset prices to go up and risk come back in the market is liquidity to come back in the market. And one of the things that could lead to that is not just a pause from the Fed, meaning pausing interest rate hikes and leaving it as it is, but a pivot, also having money printers come back on. So is this foreshadowing what may be happening, whether it be later this year? I don't think it's going to happen anytime in the next 3 months, later this year or early 2024. Well, it'd be great if it happened, later this year, early 2024, because that would also be very much in line with the Bitcoin halving coming in around the end of Q1, beginning of Q2, 2024, which tends to, we've seen, be tied to very strong bullish trends following the halving. So also some sort of impulse up before it. But so this is something we want to look. But one of the things we need to pay attention to right now is this is what we're looking at is something that could be foreshadowing. But now I do also want to pause there and say, we don't only need the Fed and the ECB to start printing for the asset prices to go up. This accounts for a huge amount of liquidity right here. Bank of Japan and People's Bank of China. So being that China just changed their regulation again, I think this is like the 18th time they've done it, and they're strengthening their position in assets. They're printing money again. There's liquidity coming in the markets, and they've allowed for digital asset purchase and trade, and Hong Kong as well. This could be something that helps get that bullish impulse that we have been discussing here on this channel. And I've seen a lot of other analysts discuss it as well. That is that initial impulse that we have in early, basically in 2023. If we look at this, this would be similar to this bullish impulse here. And we have this pullback, and then we have this line here as a halving. Then we actually have the true start of the full rest of the bull run. So we have an impulse one, pullback, and then basically final not only impulse but follow through of this bullish trend to the upside. So are we going to see something like that here on Bitcoin? And again, we've been talking about this, and we have to remember there's always different people on each stream. So I got to make sure I'm hitting some of these points each time. And it's a good reminder that if we do get this push up, whether it's here all the way, I always have my keyboard in the way when I'm drawing, or all the way up here into this, this sort of golden pocket level, 47 to 52 range, and then down, everybody thinks it's over again, and then continuing up to new all-time highs. That's kind of what I'm seeing most likely to play out. If not that, then some sort of sideways action, pullback, and then strong push up. But that's not what we're going to be looking at today. I just wanted to point out the fact that we have this liquidity pouring in that could be foreshadowing liquidity. Also, the chance on monetary policy changing with the U.S. and the Fed, which would really support that full bullish sort of follow through following the halving next year. But this is very likely going to contribute to some liquidity within markets at any rate. So that's something to pay attention to. Now, when we look at this right here, though, this is Jerry and Timmer, wonderful traditional market analyst. It's looking at basically overall liquidity in markets and how this ties to asset prices. And we're seeing here, I believe this is S&P 500. And as liquidity is going up, what is this? What do we see the price action doing on the S&P 500? Just going up and 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 up. Now, once this liquidity started pulling back, we can see this preceded the pullback on the S&P 500 drop. So what I want just to take note of is right here, as this is pulled back all the way down, and this is getting a little bit of a rounding bottom. That doesn't mean this is going to absolutely rocket to the moon, but this is just something that we need to pay attention to is when we see charts like this. And you may not have access to, Fidelity Investments charts, or you may not have access to Fred or, some, paid membership to some, great sort of data source. But you do have access to Twitter, and I want to implore you to explore the resources that are available to you, because if you don't, why the hell should you make it? If you're not taking advantage of the things that are free, then how are you even going to take advantage to the best of their ability, the things that you're paying for? I just want to point that out because, for instance, a little pause there. If anybody's ever seen the movie Dallas Buyers Club, they got, multiple Oscars. And one of the Oscars they got was for hair and makeup. Okay, now why am I talking about that when we're talking about trading? Well, because you know what their budget was for hair and makeup in that movie? Around $200. They bought it from Goodwill, local, thrift shops, dollar stores, stuff like this. All of us want to think that if we buy this thing, if we pay $800 a month for the most supreme professional glass node, if we pay for, $10,000 for this trade signals, you don't need that. What you need to do is to encourage yourself to be curious and act on that curiosity in terms of I don't have the data I need. How can I find it? Go find different accounts you can follow on Twitter, find different people, find different communities like you're doing right here at BitLab Academy, daily streams. And also if you're a member of BitLab Academy, where we have full walking through, every step of the way of crypto understanding, from definitions all the way through advanced trade strategies of, psychology of trading, trading fundamentals. Now, we could have very well charged, an arm and a leg for that, but we wanted to make sure it was accessible for everyone, but also cover the cost of the servers and all that. So very minimally priced. So doing stuff like that is completely understandable, but make sure that you start at least by exploring the free resources that are with you and tuning into the stream every day. Because I try to not only do TA, but walk through some of the concepts and why some of these things work together and integrate. So I just wanted to point this out on this chart, that we need to see liquidity come in, because liquidity is the fuel for which bull runs can have some foundation to springboard off of to go higher. And then not only that, sustain that upward price activity. So now I do want to also point out Bitcoin bear cycle bottom signal. Well, this is why I wanted to show these charts first, because it shows currently with the fundamental aspect of not having liquidity. Maybe we were going to have some liquidity come in. Historically, looking at this, when we look at these two, white candles, and which would in this case be the same as green bullish candles, once we get these two bullish candles following a downtrend, that is marked a strong possibility. In this case, it's been every time. So strong possibility of a follow through, maybe a small correction, but a follow through of a bullish trend to the upside to new all-time highs. Now we have also just established that, and I'll show that on the actual chart here in a few minutes. But the point is, we can also see down here on the bottom, we have, this looks like stochastic RSIs and RSI. We can see we had a long period of oversold, or, the weakness in the market. And then once we started breaking up, this was also, if we look directly up here, right when this was breaking up, this is also established when we had the start of that very strong bullish uptrend. Similarly right here, that's just tied to this point right here. This is multi-100% uptrend right here. Similarly, right here, multi-month sideways period, sideways action. And then as soon as we started breaking up, we're not into this sort of zone here yet, but we are starting a trend to the upside. But we have to make sure, because we started a trend does not mean that that trend is going to follow through. So we need to trade accordingly. We still need to be very conservative. And I highly recommend that you don't just go all in on leverage trades right now, because you want to get leverage trade all the way at the bottom and trade at the top. That's how 99% of people lose most of their money at these levels. And then as the price rises, they're not ever able to re-entry until they have more capital and they're halfway up the bull trend, and all they're thinking about is what they would have had. We're not going to do that. We're not going to trade on what we would have had or what we can have. We're going to trade on the data, and we're going to utilize smart, sensible trading and effective strategies and plans to ensure that we can capitalize on the majority of the move. While we do miss some of the stuff down here at the bottom, we do miss some of the capitalization, but we're doing it effectively, and we're doing it with tight risk management so that we can really capitalize on this move to the upside. Now, we're almost into the charts. And so I do also want to point out one more bullish chart, because I'm still bullish on what's happening, although there's a lot of looming bearishness. We have this sort of T-zone, as Trader Tardigrade calls it here, where we have this sort of level of resistance, level of resistance, level of resistance. And then similarly, we have this level of resistance coming to the downside. This is resistance coming to the upside. This is a resistance in a downtrend. Once we break through this, this is proven to be the start of, once we leave this zone, we have established this sort of uptrend, or the start of it. Similarly right here, uptrend. Similarly right here, is it going to play out? I don't know. I'm leaning in that direction, but we very well could, even on this chart right here, we very well could roll over and find support on this again before we go up. So the point being is, we don't have a very fully clearly defined uptrend yet. We have the first bullish impulse. We have the first bullish pullback, but you don't try to front run to a breakout or a trend, because other market participants will eat you alive 99% of the time. So the last thing I'm going to show here before we get into the charts is, looking here, we've got this rainbow price chart indicator, which essentially is showing a logarithmic curve of where price action, has been, has been traveling and likely will travel in the future. Now, historically, we had never broken down below this blue zone, but at this cycle, we had never, we'd never broken down below this blue zone. Now, in this sort of pullback and then into accumulation, this was marked by also finding support in this last green zone that we have right here. Now, in this one, we pulled back all the way into the blue zone. This one, green zone into the blue zone. Now we're actually below the blue zone, and we've broken back into it. Now, this isn't an absolute. No chart, you have to remember, no chart that you ever see is an absolute. The only absolute, even if you see price action, that's not absolute price action, because if you're looking at a chart on Binance, that's the absolute, that's the price at that specific moment on Binance, whereas it could be slightly different on Bitstamp or Coinbase or a derivatives exchange like Bybit or BitGet. So you need to always be flexible in terms of what the possibilities are going to be. Now, we've always had this up and to the right trend. Of course, we've had bumps along the way, but this does not suggest that this is not 100% prevented from actually breaking down lower from here. So we have to keep that in mind. We also have to keep in mind that we haven't fully basically proven that we're going to the upside, so we need to trade conservatively. And I see my Daddy-O is in the chat, Mr. Brad Kellam. How you doing, my brother? He's my dad and my brother. No, we're not from Alabama, and that's not a slam. That's just a joke. But I'm just pointing out here, we are still in this sort of uptrend that is showing a little bit of diminished sort of upside over time. Now, with this case right here, we see we did not even get into, in these cases, we were way above this red zone. This case, we barely touched the red zone. This case, we did not yet even get into the red zone and broke down. Does this mean in the next bull market we're not going to even, get into the yellow? I don't expect that to be the case. I still believe that, for instance, this model here, I wasn't planning on bringing this up. The stock to flow model, Plan B, got so much hate for, which I think is so ridiculous, because everybody loved him all the way through here when we were breaking above it, and then the second we break below it, people go, the pattern is broken. It doesn't work. Well, that is just absolute nonsense. I'll tell you why. Nobody argued that this stock to flow model was broken when price was this many standard deviations away from where this model, this sort of target was on this model. But somehow when we're on the low side, it's broken. No, it's just because people weren't trading with safety in mind and conservatively, and they didn't protect themselves. They took this as ultimate absolute. This is going to happen, and so they say this is broken rather than their own strategy and their own practices being broken. So I want all of you just to remember, no matter what you see on any YouTube channel, no matter what chart you see on Twitter, no matter what Jim Cramer says or what I say, nothing is absolute. Every trade decision you make, every investment decision you make is something you have to make within the limits of your own risk tolerance, your own understanding what your time horizon is, doing your own diligence. And part of watching these streams is doing some of your own diligence, because you're getting my viewpoint on it. Okay, does that teach me something? Does that contest some other viewpoint I have? Does that contest my hypothesis? And then you go and listen to Frankie Candles or Investing Bros or Crypto Jeb or Jason Casper or CryptoFace, and you might hear 5 out of the 6 of them have a similar viewpoint, where one person has a very different viewpoint, crypto savvy, very different viewpoint. That doesn't mean it's wrong. It is a tool in your belt to help challenge your strategy, to make sure that you are looking at all aspects of what's happening in the charts so that you make the best trade and investment decisions. So in this case, stock to flow model, I still think it holds a lot of weight in terms of what's going on, because it's based very heavily in mathematical models that pertain to supply and demand dynamics, as well as considering the adoption curve of Bitcoin over time in conjunction with the supply and demand dynamics. So I think we got a pretty large catastrophe that was, I don't want to say needed, but did have huge impact on Bitcoin and the crypto markets in all of 2022, with all of this absolute nonsense shenanigans coming from FTX, which even that first liquidation and insolvency that caused so many liquidations with Celsius was also due very heavily to FTX. So as sad as I am for so many people having lost money, I'm very happy in a way that it happened in this cycle and not the next, because I think it brought to light how important and how necessary risk management is, not only for retail traders, but especially for large institutions that are trading, that, you know, employ people and are managing other people's assets. Excuse me. So it's a silver lining there is that we cleared a lot of bad practices, or at least highlighted the need to steer away from bad practices with a lot of people in the industry. So I still expect, as I was mentioning before on the last chart, I don't remember which one it was, a rainbow chart indicator, although we only got up into this orange zone here, I don't think that we're going to have this law of diminishing returns continuing on in every cycle. I think it will be the case in general, but I still think that once some framework of regulation comes into play and gets put in place in the U.S., that will clear a lot of fear out of the market for a lot of institutions and retail, and then following that with retail. And so I think that we will still get another push up similar to this, that we do get somewhere up into the orange or red zones, having a larger bull market percentage push than we did in this 2020 into 2021 bull market. Now, enough of that, right? We need to get into some charts. So I see, I saw you guys put a bunch of charts here. Now I'm going to, I have a bunch of charts already marked up, so I'm going to get through all those. And then I think it probably will hit many of the ones that you guys want. I did go through a number of charts yesterday as well, but I don't want to just do TA. I want to also walk you through some of the reasons why, how I'm picking certain levels, what the process is. And that's what this is about. So if you like what's going on in this channel, if you're learning something, if you absolutely hate me, I don't care what it is, engage with this channel, hit that like button, hit that subscribe button, ding the bell. It's the easiest way you can help out and help this community grow. So big love to all of you, and shout out to everybody in chat doing it right now, not when we're at the top of this hype cycle up here. No, you're doing it down here near the bottom. And I just can't wait to hear some of y'all's stories towards the top when you're taking profits, and some of the things you've learned and how that's applied to, you know, changing your life, because that's what this is all about. So shout out to everybody in chat for being here. Now, if you're watching over there on the Hit Network, shout out to the 24/7 stream. Make sure you come over at some point and check out youtube.com/@BitLab Academy, which is, you can also see right here, and check out bitlabacademy.com, of course. Make sure you sign up for the newsletter. I did not put one out last week because I'm so focused on getting all this content put out for all the new content in BitLab Academy. But sign up for the newsletter here. I send out some different charts, some different thoughts on what's going on in the market, as well as by just entering, you also get entered to win a free month access to the courses and the indicators. So come over here and sign up for that. Put your email right here. But check out bitlabacademy.com. This whole new website's going to be brand new here in the matter of, I mean, we're having a meeting about tomorrow about when our launch date's going to be, but it's coming imminently, and everybody that's a member before that happens, then you get locked into the current pricing, because pricing will be going up once the new updates roll out. So get in now so you get locked in at that lower price level. Now, let's look at some charts, man. Let's do this. So we see some craziness happening on the Dixie. Of course, we're just going to do a brief, because I want you always to remember, we're not just going to jump in and try and take trades when we come to our trade terminal. We want to look at some context of what's going on in the market, where the liquidity sort of risk on, risk off nature is in the market. And the first thing we can look at always is looking at the dollar index, which is DXY. You can just type in DXY here. You can come over to all, and you can see U.S. dollar currency index. This is basically a metric that's weighing the U.S. dollar value against six or seven other large world currencies. The British pound being the largest, and Japanese yen, and there's quite a few different currencies this is weighed against. And the other thing is, when you see money coming into assets, when people are pouring money into investments, you see this also dropping. When you see money coming out of investments, you know, risk off behavior, the market's starting to pull back, market is pulling back, you see this this metric rising. Now I'm looking this is a 1 hour chart. It's a lot more helpful if you look at this on the daily, but we're looking more locally in terms of on what's happening today as to what's going on within the market with the idea of where liquidity is going. Is the narrative going to be risk on or risk off? And as it stands right here, we have this giant ascending wedge, which is a bearish. This is a bearish formation. When you have an asset price pushing up, and the bears fighting to the downside and then pushing up and fighting the downside. And it's getting tighter and tighter and tighter like this. We see this did fake out to the upside and then retest this, but we also see within that we formed this. This is another bearish pattern. We see that this formed a head and shoulders. And we tried to fake that out as well, but we did get a rejection to come down. Now, what I'm seeing here is there's this push-pull dynamic with what's happening in the markets right now, because there's so much uncertainty as to why the markets are trying to push higher while there's this sort of, U.S. and European liquidity crisis right now with what's happening with quantitative tightening, meaning the government, the U.S. and the European governments are still pulling money out of the markets. They're still hiking interest rates. They're still making it difficult on markets because they're trying to get inflation under control. So that causes a negative effect on asset prices, because doing that drives the value, in this case, the dollar index up. But as we're seeing on the 4-hour chart here, this isn't a bearish pattern. This has been breaking down. This had an attempt to the upside, but as it looks right now, this is making an attempt. I'm seeing this go lower. Now, we also see NASDAQ and Dow Jones at some pretty important levels of support. If these break down, then we need to have a very sharp eye on what's happening with the Bitcoin price, because it's not absolute that if this breaks down, that Bitcoin will break down. But as somebody that's trading these things, it's a high likelihood because there's a strong correlation. Now, as my dad always tells me, and I have said this on the stream before, these should be separated, and in time, I believe absolutely they will be. But as it stands right now, there's still a very strong correlation between the prices of traditional assets, these traditional markets, and what's happening with Bitcoin, because the Bitcoin is still considered a risk asset. In reality, it's far less risky. We've seen it with the supply dynamics. We see it with how it's engineered, with the halving, it is the safest asset to be in long-term. So if you have a long-term time horizon, then really any time is a good time to DCA. Some people always have permanent DCA structures on, DCA being dollar cost averaging, continuing to add to their portfolios, regardless of what's happening with price action. Now, in the long term, I think that is the play. But if you're actively trading within the day or within a week, and you're trading the upside and the downside, then you want to watch this correlation, because it could have an impact. Now, we've checked out our macro. We've checked out our context. We know that Bitcoin, we've done this almost every day for the last couple of weeks. We want to just peek here quickly at what's happening with the USDT dominance, because this is almost like the Dixie for, in a way, it's not the same, but it's similar to the Dixie to traditional assets. We can also see when this is pumping up, this means money's coming out of, people are moving out of their positions in crypto and then moving into a stable coin to be on the sideline. And then when this is moving back into, when this is dropping, this means people are selling their stable coins and trading them. They're getting into positions in crypto. So we're seeing this came into a bit of a level of resistance here. I'm hoping this continues to push to the downside. Now, let's go ahead and look at a bunch of charts. So as you can see, I cleaned up my chart. And I hope it's just like cleaning your room. Sometimes you get a clear head if you clean up your chart. Now, I still have access. To my other chart. I have mini charts here. But as you can see, there's just too much going on. It gets a little muddy. So you want to make sure that you come in here and you just make some simple key levels. Okay, I can even delete this Fibonacci here. I'm going to delete this Fibonacci. Boom. Now we can see I have the previous all-time high, this sort of interim all-time high for suggested potential low if we do break down. But then we also see this sort of level of major support here in the previous bull market top and corrections. And then once we broke below this, so this is going to be a key level for us when we do break up, when we do push to the upside. My dad, he said, as Kelly will tell you, I am a market indicator. If I sell, the market goes straight up. And when I buy, it goes directly down. Well, a lot of people feel that way. And you have to get out, everybody, we need to get out of trading emotionally and caring about FOMO. Don't have this fear of missing out or missing a move because there's a green candle. You don't buy a green candle. You buy towards the end of when red candles are happening, or when there's a green candle within a chart pattern, and then you break a resistance on a chart pattern and you have confirmation. And we're breaking all that down here on here on this stream, as well in a lot more detail in BitLab Academy. So we have our macro, we've seen this. So we're gonna go directly, and I've already outlined where I think the prices would be going for this cycle, potentially even pushing up. I'm gonna do Option F or Alt F if you're on PC, that gives you a fib, potentially all the way up to this $48,000 level, getting a rejection, coming back, testing this $25,000 level, and then go to new all-time highs in 2024. And what I just said, I'm talking about taking place over all of 2023. So what we want to look at right now, because we've talked about a lot of macro stuff, let's get into some smaller time frames. We're going to be looking at the 4-hour chart today on a bunch of different coins, and Bitcoin, as well as many different alts. So let's go ahead and do that. We already understand that we're fighting to really clearly break out of this downtrend. And one of the last things I do want to point out here is that we see this blue line right here. You see, I have the 4MA right here. And what I have turned on is the 20, 50, and 200. You see how I select these right here? And you can change the colors on these or make them brighter or dimmer, all that here on the chart. And we can see this previous level high here on this range is also perfectly, basically in this sort of region. As we can draw, we can see, I'm going to do this right here. We see this line right here. This is a 200-week moving average. Actually, no, sorry. This purple. I changed the colors on two different charts. This purple is a 200-week moving average. And this right here is the 50-week moving average. And we're kind of sitting below the 50. We're sitting right at the 50, and we're sitting also right at the 200 as well, is where we got rejected. And so we're kind of having a small correction here, which is understandable, because not only do we have these two levels, these major moving averages, we also have this previous price action high. So it makes sense. It's not the worst thing in the world that we had this massive bull trend to the upside and we didn't go straight up, because what goes straight up goes straight down as well. So it's good to have this push up, a little bit of consolidation across here, the small correction. And so now what we want to do is we want to zoom in here on the 4-hour, and I'm going to just look at this. I'm going to delete this line here. And what I want you to notice here is we have a bit of, this trend line of this sort of this smaller time frame of what we've kind of been fighting off of right here. We broke down, and we're kind of fighting down, but we've broken through this line. So if you were trading this is something that you could utilize. Just, the first step is identifying that you have this downtrend level of resistance. So we have this level of resistance. We also have price action breaking through this level of resistance. And what I like to do when I'm doing a trend line is I like to make sure that, sometimes people try to put it on the biggest candles. What I like to do is I like to sort of find the point that this touches the most candles, because we have a lot of fake outs like this. And in this case, we're touching 1, 2, 3, 4, 5, 6, and then this broke through. So this also got rejected. So we'll call that 7. And we see this sort of breaking through of this level here. Now, if you were to trade this on a smaller time frame, because you're trying to trade just, you're a scalp trader and you're trying to trade this move from here to here, that's an 8% move back to this 25,200 range, So breaking out of this move, you don't want to just buy it just because we bottom right here. You don't want to buy every single time you think price bottoms, because then you end up having no capital left. You want to be patient and allow the moves to develop. So in this case, we broke through this level. And so trading spot, not leverage, what you do is, on the breakout of this level, you essentially set your stop loss, if you want to be very conservative, basically right about at or just below the previous candle low, or this move low, which is right here. This is about a 1.2% drop, and then we can target this up to this. Basically up to the top of this level if we wanted to. But what I recommend always is coming to the top here. If you're on Mac, you press Option. If you're on PC, you press Alt and then F, and then you click on the chart. That gives you a Fibonacci. And then you basically just pull this down. You don't have to hold it. Once you click, all you have to do is click. And then you pull this down. You see this line that's kind of going right here, which is the bottom. And we can click. Now we can identify that this might have been, this top might have been a little too high of a target, absolutely, to take 100% of profit. So what we will want to do is we can see with this full move here, target would be right about this golden pocket, which was just short of this level right here. So we know that it's likely, there's a strong likelihood that price action pushing up will reach this golden pocket because that's this full move. Now, the additional way we can do this is we can actually do it just from this move, this full move here, and we can see, look at where we're getting a little bit of rejection here. So what I would have recommended to do is when you do break out of this move, you have, once you start moving up and we get to this golden pocket, you move your stop loss up, a little bit into profit, and you allow that this level on entry, your golden pocket from this move would be one zone of taking profit. So you break up your profit taking. So you're not just trying to, put everything in and then take everything out. You do your entries, and then you take some off the table at a golden pocket. And then on your pullback, once you see, now we're on a 4 hour, we come down to the 24 minute, and we see a lot more clarity. We see if there's any sort of signals, and I'm not even using indicators on this. I'm just using Fibonacci and price action as an indicator of what's going on. And then if we're seeing this sort of find support, we can see this level right here, option J, we getting bounce here. If this holds this level, it starts going back up, then we can we can sort of strengthen our position, move our entire position stop loss up to, basically a bit higher, and you'd have to determine that on your own, essentially kind of going option F from this bottom to this top. So I would move my stop loss to this golden pocket zone at about 23,450. This way I'm in profit no matter what. And so this is what we can do. This is how we can see the setup. We see the clear breakout, and then we can basically trade this position up and taking the remaining portion of our profits out, or not the remaining, but a significant amount out at this level. Now, I want to point out, this is somebody that's trading a specific smaller time frame swing trade or scalp trade on this move. In this case, I would call it a swing trade because the scalp trade tends to be very quick over the course of an hour or 2 hours. So this would be a swing trade, trading the swing from this position up to this position here. Now, you can always leave some, you don't have to close your whole position. You can take the profits and move some into your HODL portfolio, keep some in your trading portfolio, and some into fiat currency that you can use to trade. You're gonna have to determine what that sort of split is for yourself, but that's how you sort of find determinations. Now on this was not even using the indicators. So now if we use the indicators, we could see here, the BitLab Market Intelligence. Okay, we are on the 4 hours, what we're looking at. So we can see zooming in here. So boom, on this zone right here, look at this. So we have the relative extrema, which is this right here, sticking out of this cloud. We see this finely colored cloud. We see these sticking out of the cloud. This is very bullish. We have a neutral gray area down here on significant movement. So doesn't mean it's overheated. You don't have the blue, which would be better, but it's not overheated because it's gray. We have this sticking to the downside right here, which is bullish pressure to the upside. And then this basically front ran this right here, which is kind of our excitement, our signal. This is bullish divergence on the volume, showing volumes coming in faster than prices going up, and it's doing it as we're getting closer to this zone. So in this case, I would have zoomed into like the 1 hour time frame, and coming into this zone, I would have executed somewhere in this region right here. Somewhere in this region right here. And you're going to have to determine what your strategy is here. But I like to use larger time frames. In this case, I'm trading small time frames, but I'm using a 4 hour, and then I'm breaking it down to the 1 hour, the 24 minute to get more clarity as to where my signals are to take those entries. In this case, we could see this is likely reversal. This is that same move on the 24 minute. But so you see how you're getting more resolution. We had the setup on the 4 hour, but we get more resolution by zooming in on the 1 hour, seeing the context still supported, and then the 24 minute, we're seeing that also on the 24 minute, we're getting two low signals here, as well as bullish divergence coming in. Bullish divergence, remember, is there's metrics and momentum and signals coming in and buy pressure that is not being agreed with yet on price action, signaling that price action likely will be moving higher. So that's what we're seeing with this right here. Now, if we turn on I have only the last setting set up on let's go to full on the market intelligence. I kind of clean this up so it's easier to see. Is really no. Oh, it's full. This is sorry, I clicked the wrong button there. So we'll be able to see here in a moment. There we go. So we see the momentum bullish divergence that was coming in, and then this was followed. This had the relative extremity to the downside. So you're getting strong signals here, and then the trigger there would have been right here. Not even being fully patient and conservative as you should be, but you could have taken that signal by seeing the gray area. The blue came in here on the significant movement. This was already outside front running it. Then we had the bullish divergence here on the Bitcoin here on this movement, and then followed by the final sort of trigger if you're trying to be very safe just using this indicator package, seeing the bullish divergence here on the hidden volume. And that is when you see these green flags on the bottom or red flags on the top being bearish divergence. So this was a clear signal. Now that's what I was seeing on Bitcoin. And so I'm thinking that it's likely, let's go ahead and mute this. I'm thinking that it's likely that we do get a small pullback here. And I'd like to see, we're going to go back to the 4 hour. I'd like to see this continue. If this loses this level, and especially if we lose this level, then I'm trading. Basically, I'm looking for short positions to trade to continue down, because this is a bullish attempt to go up. This is a bullish attempt to go up, but we are getting some rejection here right at this golden pocket on this move. So this is a little bit concerning. But this was a trade setup you very well could have taken. But there's still trade setups, I think, brewing in many of the altcoins. So we're going to kind of run through these really quick. So now looking at Cardano, we can see, okay, this was also breaking out. I'm looking here on the 4 hour. We have the similar down. We're having a lot of similar signals on a lot of different altcoins, as we can see right here. So we had this similar to the Bitcoin. We had this price action downtrend breaking out to the upside. Now, you very well could have entered this. Now you, let's go ahead and look at the indicators along with this. You very well could have entered this. You could have had your targets, but you will have your stop loss in place if this were to be rolling over. Now, one of the things I like to do, if there's a lot of bearishness that's coming into the market, when I do set this trade, I set the trade immediately with a stop loss. And in this case, I do it just at the previous low. Remember, I'm spot trading this, so I'm not worried about being liquidated. So I can have a little more forgiveness with where my percentage, this is a 3% drop stop loss, because this is where the previous low is. Okay. Now with this previous low being 3%, if you were doing this on 10x leverage, that would be a 30% loss of that position. You lose 30% of your collateral in that move. So you have to trade accordingly. If you are trading leverage, I don't recommend it at this stage in the market. Then you need to, really almost I like to divide this by about if you're doing 5x, then you need to have 5 times stricter sort of, because I don't like to lose 2 to 3% or more on any trade when I'm entering it. So looking at this, we're looking at the 4 hour. This did look like it had a setup. If we turn on we had, look at this, 6 bullish divergences that could have given you that position there. That would have been 3% move. Now it does look like this may roll back. So let's look a little deeper on the price action here. We're on the 1 hour now. Now this is giving me a little bit of hope, but not entirely, because we can see right here on relative extrema with this very small pullback. This is showing that this is almost like an overextended, exhaustive move from the bears. Okay. What I'd like to see is 2 things: not getting another one of these, because we're getting 2 bearish divergences over this time frame, showing there is some bearishness involved. But this was sort of contested with this blue wave here on the significant movement, showing that this was a likely trend cycle floor, this likely trend floor, which we got. We did get bearish movement. This moved down, found the floor. This did push to the upside, but this was immediately followed by bearish divergence on the hidden volume. I'm looking here on the 1 hour, and we can see the relative extrema is pushing to the upside in this position right here, showing that the bulls were a bit overextended at this zone, and we were either going to go sideways or likely pull back. And we started to get that. So I'm going to expand this here. And then we followed this immediately with 2 bearish divergences. This is RSI and momentum, I believe. I like shorthand. I put it on shorthand just because it cleans up my chart a little bit, so there's not giant flags. So we see RSI and money flow index. Okay, so we are getting a little bit of a pullback. This isn't the end of the world yet, but we have to be prepared for this to break down. It doesn't necessarily mean it's the end of the world, but let's say the end of this move. as this starts to break down, we're looking at this previous price actions. We're looking at this previous price action resistance that we've had. Okay. Now I'm seeing a number of things here. I'm actually going to zoom in on this, minimize that chart, and I'm seeing another sort of zone, another resistance level that's kind of a smaller resistance level that's right here. But what would be really nice with this, we can even move this over. What would be really nice with this is, in order to get a bullish setup out of this, what would be great is we've broken this line. We want to come back and test this, which it looks like this wick coming back up suggests that we are testing this. And if this does roll back over, then what does that give us? That would give us, we have our left shoulder, we have our head, and then we have our right shoulder right there. I'm going to go ahead and redraw that a little bit more appropriately. We have our left shoulder, we have our head right here, and then we have our right shoulder. And this could develop into a more bullish setup. So you don't necessarily miss the move by not catching that. You can let things develop, let this play out, let this go up, test this as flipping to support, and then enter this move somewhere about right here, and then having your stop loss. In this case, I would move my stop loss a bit tighter, because this is the bulls pushing up. The bears trying to make an attempt lower, the bulls trying to make another attempt higher. And if this fails, then this is likely to continue down. So I would move this, basically the stop loss, if this is trading along, of course, just below where this trend line would be. So somewhere in this region here. So in this case, it would be somewhere in the 35.5 to 35.6 level. But I'm looking at this likely trading an uptrend, likely forming a head and shoulders. Now, this does look like it's still making that attempt to the downside. So let's get some more clarity. We want to see how this level plays out. If you are in the trade, it's okay. Look at it. So there's this bullish bearish battle right now. So we know if we lose this level and we have our stop loss in place, we know price is going lower, which means if you are bullish, it means it's okay. It means you have an opportunity to get things at a better price. And if your stop loss gets hit, you lose a very small percentage of capital, it's okay, because you do, 10 trades and you have very tight stop losses, a small percentage of your capital is eaten away. But then when you do hit the trade, and when you do wait for the setup to be in place, and you do execute, and you still have your stop loss in place, and you're getting it at a lower price, you are in control of your profits, because you're waiting for these setups. You're okay with stop losses getting hit, but you're not taking a shot every 10 minutes. You're taking shots that are calculated. In this case, we saw this setup brewing in, setting up. And so then we take our shot. Now I'm going to kind of zoom out on this. And we're seeing the relative extrema is trying to give us a signal. We are getting some bullish divergences here, so there's still an opportunity for this to continue with that the head and shoulder, the inverse head and shoulders, as I was talking about before. Now that's what I'm seeing on Cardano. Let's go ahead and make this large again. With this, I'm seeing, probably a little bit of a pause here at the 37.9, 38 cent level, because this is a golden pocket from this larger move. And this is the previous support right here in this zone. So I would be taking some profits at this level. Waiting to see how price act, because everything's so bullish, bearish right now. There's a lot of contested sort of areas. So if we do get a lot of contested, if this does get very contested, of course, my stop loss would be moving up. So my entire trade would be in profit regardless if this does roll over. And so that's what we want to do. We want to wait for these levels of confluence. We want to see the divergences. We want to see, stochastics and RSI, and we can look at that here. We can see these stochastics getting reset. We can see RSI is trying to hold above this, in this zone here. And this is on the 24-minute. Of course, if we come back to the 1 hour or so, there's still some room that this could come down in terms of stochastics. So, but see here on the 1 hour, this is holding right now just above the 50 line, which is trying to establish this bullish narrative. And this is why I recommend somebody I'm working with one-on-one right now, and he wants to trade every move, and it's like right now is that time that we have to remember You have to remember on these charts, we are still battling. We're still battling whether or not we are here moving up or we are somewhere still within this. You know, these are the same zones. This is the start of a bull trend, right? This is just looked at two different sides, you know, coming out of a bear trend, right? So are we right here about to get rejected back down with this false move up, or are we right here? This is why I'm recommending not trading leverage right now and waiting for multiple different setups. Now I want to go through a number of different charts, so let's do this quickly. I want to look at, we haven't looked at the graph lately. This was making a lot of runs, bullish runs to the upside, following a lot of the AI moves. So we're going to go to the 4 hour. Okay. Similarly, we're seeing a bit of, you know, this same move that we saw in Bitcoin and Cardano. We have the same sort of thing playing out. Same thing as we're seeing on Cardano. Let's get a little more clarity. We're going to go down to the 1 hour. Now we can sort of zoom in on this. Are we going to get this rolling over, which would be the same thing? Left shoulder, head, right shoulder, in which case then we can look at our upside target, and the upside targets would be, you know, first off, coming to this top position here from this move that we're establishing this trend line. We do Option F or Alt F if you're on PC. That gives you a Fibonacci. And then you click and then just move your mouse to the bottom here. And so what I want you to notice is that this price action, this wick, look at this wick went right up to where this golden pocket is. Golden pockets can give people just, I don't want to call it a full-on edge in trading, but it gives you a good framework as to what's going on, where a lot of other people likely will take profits, where trend reversals take place. Now we're looking at this on the graph, and we can see this did get rejected, but we're trying to fight to go above this level. We're getting rejected at this trend line as well. Now this trend line is a bit uglier. Excuse me. We are making an attempt to the downside, but we're finding support. So with that, I'd be very hesitant on this in terms of making that trade to the upside. This is going to be somewhat reliant on what happens with Bitcoin and the rest of the markets, unless other news comes out. On this chart, I am seeing the same thing. I'm still bullish on the graph. I'm thinking that even if we get another pullback from here, there will be a setup brewing to get back to these to these levels up here in the 18s, and then further further and beyond, especially with this sideways consolidation that we've had here. Looking at the rest of the indicators, we are looking like, if we're on the 1 hour chart, this is looking a little overheated just on Extrema. We got the on balance volume and the Extrema and neutrality here. So I'm thinking there's going to be a little bit of a consolidation here, unless there's some news that does not prevent this from getting rejected. As it stands right now, it looks like there's going to be a few more hours of pullback on this, and so keep your eyes on the graph and look for another setup. Now looking similar, and I just want to point out, similar here with the setup, if you were to enter this at any point, your stop loss would have been somewhere about below this here. On the way I was going to be trading, taking a trade on this, I already have some positions in this, but my next position would be once I broke out of this level. And as you can see right here, this is where my entry would be, and the target would have been, let's see, right up here at this this high, and this would have been a fairly weak trade, but that wouldn't have bothered me because I already have a bunch of positions on them. But what I'm okay with, the reason I would be okay with this trade is if there was a bullish narrative coming in the market and things were going to be running, then I'd be taking advantage of the last opportunity at this price. If this does reverse and go back down lower, I am so excited about that because I can take advantage of buying this at a lower price. Now we also see that we have a bit of a broadening wedge. Here. So this very well could also get rejected and come all the way back down here, in this sort of 14.9. This is on the 1 hour chart too. If we go to the 4 hour chart, yeah. So we just need to keep our eyes on the graph. Now looking at, I want to look at H-bar. People were requesting H-bar, I saw. So H-bar had the same setup. Got rejected. So there's inherently some bearishness coming into the market right now. So all the things about the bullish targets, remember, I was also pointing out that the downside levels, we need to pay attention to where the potential downside targets could be, because just because there's bullishness brewing doesn't mean that that's absolutely going to play out. Bears could come in and wash this out. Excuse me, I had to hiccup there. So as it stands now with, look, this is the 4 hour. Looking at the 1 hour on H-bar, I'd be looking for a target. If I do this just on this 1 hour chart, it looks like this is coming down. If this does not hold this level right here on H-bar, this level, which is basically the 7 cents, just below 7 cents. If this does not hold this level, 7, more specifically 698, 0.0698. Then I'm seeing, likely retest of this sort of descending trend line that we have here, which we can see would be roughly about 667, which is not the end of the world either. But if we lose this level, then it's going to be much further downside. Now I'm going to do one more coin. As we can see, there's a lot of sort of bearishness in the market. Let's go ahead and do, I'm going to come back over here. Let's go ahead and do Link. I saw some people asking for Link as well. That's, I think, one of the only ones. Okay, here we go. Boom. So now, as we can see, I'm going to go to the 4 hour, go to auto, minimize this. Now, similarly, we had the same setup on all these coins. These markets are working in sort of tandem right now. Link would have had a lot more work to get up to the upside. We are having this sort of, I would not call this an inverse head and shoulders, but we're having this bullish attempts to the upside, failing at this very obscure neckline. Option T gives you that trend line. This just ugliness on this, just ugliness is ugly. So we can see that there's a bit of a descending wedge happening here on Chainlink. If this is getting rejected here, we can also still do our fib from this level here to the bottom. We're getting rejected at the 382. I can see this, very well coming back and testing lower, but we can also do the most recent move right here from the bottom to the top. If we lose the 72 cents, $7.72, that would be a hell of a good price for Link. $7.20. If we lose this level, then I think we're going to continue on down to get back down into the $7 range before we try higher again. So as we can see, as we saw through a lot of the charts that we were looking at today, there's just bullishness brewing, and then the bears come back and battle. And just to remind you, anytime we're looking at the charts, every single candle we see is a battle between the bulls and the bears. When we're looking at price action, we're seeing that play out over time. Even this, if we're looking at this entire, period, this is, let's see. So even all of this that we're seeing right here, all of this bullishness into bearishness, if we go to the daily chart, we see all of that played out in this single candle. This one candle is showing that same thing. This is why I really recommend you using larger time frames to get your frame of reference of what's going on the charts, and then identify the time period that you're trading in, whether it's the daily, the 8 hour, the 4 hour, the 1 hour, whatever it is. Understand different time frames you're trading in. We'll give you time horizons for when that trade may play out. And then if you're looking at this daily time frame, then you can divide this down. You can see all the moves. We can see on this, the open of this candle is here. The close of this candle will be whenever it closes is the top. We see more specifically, this price action on this one candle alone has traveled all the way down to here, and the bulls ate it back up, and it's traveled all the way up to here. We notice this by this what we call a wick on this candlestick, and the bears are pushing it all the way back down. So there's a lot of battle going on here, but we are seeing this trying to reverse and to come back to the upside. We're seeing a lot of battle going on with everything in the charts right now. So I just want you to be patient. I want you to remember your patience, identify what's happening in the Dixie, identify what's happening within the USDT.D chart, which is the stablecoin dominance, or the USDT dominance, which has a great metric on risk on, risk off behavior within the crypto markets. And then identify your time frame. And then when you're going into trade, always have a plan. Always be patient, and always ask yourself, what's your entry, what's your take profit levels, and what's your stop loss. Do those things. It will always strengthen your ability to be consistently profitable over time. And with that, I got to go for now. I hope you all have a wonderful day, and I will see you in the next video. Adios, muchachos. Thank you for coming. Thank you for being my friend. Adios, muchachos. Thank you for coming. Thank you for being here again and again. Adios, muchachos.